Welcome back to this channel. This is Unfiltered Forex with me, Clement, and I am here for the forecast or analysis of what's to come in the next FOMC meeting, which is just tonight, depending on the time zone you are. Okay, let me begin. So today we'll be getting the much awaited FOMC statement where we're expecting the Fed to deliver a rate hike of 25 basis points, bringing the federal funds target rate to 5.5, up from 5.25%. And then, of course, at 6:30 p.m. GMT, FOMC press conference is where we'll get Chairman Jerome Powell to come give his remarks on the and expound more about the FOMC statement and talk about the future path of monetary policy, whether they're going to hike more or there are rate cuts coming or something. We'll just see what he's going to say. Anyway, for now, this is where we're at. FOMC press conference, blah blah blah. Waiting for that. So let's go to somewhere here. Yeah. FOMC meeting preview. Powell faces crucial decision as inflation data puts Fed at crossroads. At the upcoming Federal Open Market FOMC meeting on Wednesday, the Federal Reserve is poised to increase the Fed funds rate by 25 basis points, pushing borrowing costs to 5.5%, the highest since February 2001. While the market shows strong conviction in this rate hike, economists still hold differing views on whether this will mark the end of the current rate hiking cycle. So guys are wondering if this is going to be the last hike or there are more coming, especially since inflation after it dropped to 3% year on year in June. This is the CPI, all items included, the lowest level since March 2001. Inflation remains a pivotal factor in shaping the Fed's next decisions. Investors are eagerly awaiting blah 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 blah. Let's continue. You can see there's a small chart here. This is the current rate, and we're expecting them to hike further to 5.5 percentage points. Okay, let's explore the insights of some analysts. John Lynch predicts that the Federal Reserve will raise interest rates by 25 basis points at its next meeting. The uncertainty stems from whether this is the final hike of the current cycle, as well as the duration of elevated interest rates. Fed Chair Jerome Powell's recent hawkish remarks signal that the Fed may raise interest rates twice more this year to combat inflation. Nonetheless, anyway, as you can see, due to uncertainty around the delayed effects of rate hikes, analysts expect the Fed to adopt a wait and see approach on future rate increases. Okay, so this wait and see approach is what the Fed has been doing for a while now. As you know, or if you don't know, let me tell you, the Fed, the chairman Jerome Powell, he keeps saying they're data dependent, and even the most recent meeting in the press conference, he said they decided not to hike to take time and assess the impact of the cumulative rate hikes on the economy and see if they're going to have to deliver another hike. But they did say, yeah, they see two more hikes coming. Michael Gippen, U.S. economist at Bank of America. Bank of America's U.S. economists forecast a 25 basis point increase, raising target range like that. The market will focus on four major communication cues during Powell's press conference. Number one is reaffirmation of the 2% inflation target. That's going to be hawkish. Seeking lower inflation without damaging the economy. That's something to do with the dovish side. Signaling the possibility of further tightening. That's a hawkish statement. And highlighting data dependency. That's another hawkish statement in some way, because as you know, this guy Jerome, he doesn't like to say what he's going to do. He just say we're going to be data dependent, and that's usually his script. That's what he sticks to. The Fed aims to sustain disinflation by methodically tempering the economy through a balance of supply and demand, the analyst says. Okay, let me just go to the federal funds futures somewhere here. The CME Watch Tool, the Fed CME Watch Tool, yeah, CME Fed Watch Tool. Stay up to date, latest probabilities. Next FOMC meeting in 7 hours, 57 minutes, and 15 seconds. So here we are. Target probabilities for 26th July meeting. This is today. As you can see, the probability of a rate hike is at 98.9%, and the probability of a 50 basis point rate hike. So this is 25 basis point, this is 50 basis points. Probability is 1.1%, very low. Okay, but this one is really not going to move the markets, all right? You need to understand that this outcome has already been priced in by the markets. Like, let's say, if you're expecting a rate hike of 25 basis points, of course, you have already adjusted your portfolios to accommodate that hike. So if when the hike comes out, that's definitely not going to be the determining factor. That's not what everyone is waiting for. The most awaited things in this meeting is the statement, of course, the FOMC statement, and then the press conference. That's where these probabilities. Now, let me pull up this pen. These probabilities are the ones being watched the most. As you can see, the probability of these two more hikes is quite high, but still less than the probability of a pause. Okay, let's say now the Fed delivers this hike, right? These other probabilities, this now becomes a pause. This will now be a hike, and this will be a pause. So, according to what according to what the statement will say, first the FOMC statement, what the statement is going to say, and then what Jerome Powell is going to say. That's what's going to really change these probabilities, and that's what's going to affect the market. Of course, you need to understand that hawkish statements, of course, they mean more hikes coming, probably two more, or he can even say they're going to maybe not hike again, which is very dovish, but again, turn hawkish and say we're not seeing rate cuts coming anytime soon. And then maybe turn hawkish again and say they might even have to deliver more hikes should incoming data suggest that the threats to inflation are still very much alive. That's something to watch out for. Okay, now I think I'll go to the charts. Here we are. This is the chart of the dollar index, the daily chart, and as you can see, I had marked these lower highs. No, they're not. Yes, they are lower highs. I had marked these lower highs here, and there was a common support which broke out. This was on CPI day, and then retracement. This is what I was expecting, a retracement, and then the downtrend continues. This downtrend will continue, of course, if Jerome comes in to say, if Jerome adopts a dovish stance, or if the FOMC in general adopts a dovish stance and say they're probably not going to hike again, or maybe there's just one more hike coming. That's really going to be bearish for the dollar, and you're going to see that downward decline there. Okay, an alternative move is an alternative move is if I delete this one, right? We're expecting the the market might come back to this point and then start declining from this high. Because something I know with these meetings is usually the move, it starts early. Like, let me mark my chart a bit more so you can understand what I'm trying to say. Yeah, here we are. So they're vertical lines. They represent the dates of the FOMC meetings. Let's see, this one is today, Wednesday, 26th July, Wednesday, 14th June, Wednesday, 3rd May, Wednesday, 22nd March, Wednesday, 1st Feb. These are the dates where of the previous FOMC meetings. And as you can see, the difference between one meeting and the next, there was something like sort of a clear price swing. And here you can see this one, it was a downward trend. This one was upward, and then here from it was upward, and from here now it has been a downtrend in general. For the most part, this was the strong one. You can call this one a retracement, because now let me go to what I was trying to highlight. Every day the FOMC move comes, okay, every day of the FOMC meeting, the move on the DXY is usually having to have started some few days prior to. Okay, so like on this day, you can see the downtrend was clear, and it started here. It didn't start on the day of the meeting. It started above here, and on the day of the FOMC meeting came to give the volatility to push the price of the dollar index further downwards. And then upon reaching this support zone, it kind of stalled a bit and started staging its reversal. And then on the day of the FOMC meeting, from that day going forward, it was a bullish trend, which was kind of started here. You can say that. And then s- price paused here, and on the day of the meeting again came down and triggered a retracement, and then down again, continued to decline. Something important you need to understand is, in between here there was another meeting, there was another day. It was the European Central Bank Forum. Somewhere here, I can't remember the date exactly, but there was a time where the meeting came and Jerome did send some dovish vibes, and hence this retracement, and then this the downtrend continued, and then now we are here. So currently, if you ask me, I'm just going to tell you it's a wait and see kind of thing. But honestly, other than that retracement scenario I showed you earlier, it's very likely that price might also come back to here, or even just go higher from this point onwards. That, of course, depends with what that guy is going to say, what the FOMC is going to say in the statement, if there's more hikes coming, if there's no more hikes, if this is the last one, or maybe even the possibility of them delivering a big hike and calling it a wrap, which is very low. Okay, so currently that's what I'm expecting, right? For the dollar index, I am bullish on this index. No lie, I am bullish on this one, probably to these level. Hmm. As for other currency, let's look at the stock market, the Dow index, the Dow. Yeah, currently this is what I have on the Dow, and as you can see, I have a buy setup here. I'm expecting it to be triggered, and then price is supposed to rally. I'm expecting price to rally once the market opens, and then probably when the time for the FOMC announcement is coming, wherever price will be. Well, for this time, I am seeing price might be quite high, and then Dow is on a 12-day winning streak. By the way, if this day closes green, that's going to be the 13th day of this winning streak, which is very big news, of course. So as you can see, this is what I have for now. You can zoom out because the last time we were at these highs, it was pretty long ago. Yeah, as you can see, the uptrend is very strong on the Dow, and even the possibility of revisiting these 36k levels is quite high, since we are closer to 36k than we are to 34k, just the lows at the beginning of this year. And of course, if you remember, there was a banking crisis sometime early this year, but that has changed. It's not there anymore. Some would call this setup a QM, by the way. Yeah, so a QML. You know that kind of retracement where let me use this one. You know that QM where price goes like this. Oh my god, what am I even doing? Let me just use this one. QM, like what price is doing here. First goes here, a retracement, and then takes out that first high, and then takes out this initial low, and then once it retraces back to the level of this high, and then the sell-off starts that a QML reversal. It looks something like this. I don't know if this is it, but we're going to wait and see. If this buy is valid, by the way, you just have to wait, and by the time of the FOMC meeting, you will have known what price is going to do. You will have known for sure. If then, of course, just manage your risk well, and all will be well with you. Let's look at another pair. Let's look at the euro dollar. Here we are. This is the euro USD, and as you can see, it's quite an uptrend. Let's just draw this some lines here as you watch. I think I'll use this one. Yeah, this tool. I prefer using this one. Something like that. Very something very clean. And as just as we have seen in the dollar index, the move usually starts a few days prior to, and then when the FOMC meeting comes, price just continues gives the event gives price the volatility to push the price further into the direction of the trend that had already started. So I'm expecting something similar here. It's very likely that price will take a deep dive to these levels. I am not sure. Okay, I'm not sure, but that's very likely to happen in the next few days. As you can see, yeah, if I was to put these lines on this chart, you'll get the same kind of the same picture, just an inverse of it, because in the dollar index, the basket of currencies that make up the dollar index, the euro is over half, over 50% strength. So yeah, that's why the correlation is very a strong negative on these two pairs, the euro USD and the dollar index. Okay, so that's it. I think that's it for now. I'll just have to wait for the guy, the Jerome, to come. Wait for the rate hike. Wait for the FOMC statements. Wait for the press conference, and then we're going to see what that's going to do for us, and we're going to see where that is going to take price. But for now, it's very likely that this move will be continued. A continuation is very likely from this point. That's it for this video. Wait for my next video on after the press conference where I'll be breaking down the events and talking about what really happened and why the markets moved, because the markets will move indeed. See you then.